Welcome everybody, this is the Speculator again at takeyourprofits.com, and I'm here to go over another round of post-trade operations with trade number 87. This is a post-trade review for trade number 87, which was a long entry in the US dollar Canadian dollar market. This was a very important trade, being that I was coming off of a 9-trade losing streak, which was the biggest round of drawdown I've been faced with all year. And as in any good losing streak, the most critical rule is to continue to trade through the drawdown and trade my strategy with disciplined and consistent execution. Going into, this is the chart. So let me go into the chart of the trade itself. Trade number 87. This was the set strategy itself. My entry was at 98.20. Protective stops were placed at 97.14, just below point X of my Gartley, with the ABCD harmonic move completing here at the previous resistance of this pennant flag that was formed over the previous month or so. Going into, I want to just check out the first question of the post-trade review is whether or not, to answer the question, did everything go as planned? So in order to figure out whether or not everything went as planned, we got to look at the DSL Pro Trader dashboard, and that's over here. Let's find out what was planned. Okay, trade number 87, US dollar Canadian dollar. It was a decision trade executed based off of a decision made on the 4-hour chart. I had identified, objectively identified, based on my rules of engagement, stochastic MACD crossover. I identified that price was trading at a major level of structure. We did have ratio confirmation. We did have higher time frame confirmation. There was an ABCD harmonic move with a 618 retracement. And price did complete at an 886 retracement of the XA leg, scoring at points for the Gartley222 completion. And then dropping down a time frame, I was able to identify a butterfly with a CD extension with the CD completing at a 141.4% extension of the AB leg within that butterfly pattern on the lower time frame, which also, and then actually I also scored at points for an aggressive C, being that this was a trend continuation off of a larger ABCD pattern identified in the market. Now, all those identified technical indicators gave it a combined technical score of 14 points. That earned it based on my mathematically defined money management rules, that earned the trade a suggested position size of 1, and then based on my entry and profit target, my profit targets, this did have a 0.87 risk profile. Now I suspect that 0.87 risk profile comes from the fact that I did chase my first target, so therefore I did sacrifice a few pips to ensure that I did turn a profit in order to expedite my protective stops to break even. Now, based on those characteristics, the profile of the winner the actual probability profile of this trade showed that this was a very high, one of my higher probability trades of 78%, and after having closed this trade so far, this particular trade strategy has earned me a total of $3,094 on the year. And that has to do with the fact that we're looking at combined advanced patterns on higher time frames and lower time frames. So we're really looking for patterns within the patterns here on this particular trading strategy. So that's what went as planned, and obviously this trade was a win. It's a 9-day long trade. The trade was 9 days long. It was a long entry, Canadian dollar market, 4-hour chart. It was a win. So the trade did go as planned. Oops, sorry about that. The trade did go as planned. Now, going into the technical details of the identified patterns classified on the Pro Trader dashboard, we can see where the ratios were confirmed here at the 886 of. There was a retracement taken from X to A that gave me the 886 retracement, which is where price traded at. I actually hesitated taking the long entry on Friday, which was this last red candle. The low got down to 97.70. I was actually looking for 97.74. The market went down as low as 97.79 is where the market closed on Friday. I did not take the entry. I should have taken the entry at the 97.79 level. I did not. So when the market gapped up on Sunday, I took the trade long at the open and gapped up 30 pips. So I therefore missed out on the opportunity of making those 30 pips of profit for not taking the trade on that Friday, even though Friday has typically been my better trading days for the year. So we did have the ratio confirmation here at this 886 retracement of XA, being that the AB leg extension also confirmed the trade in this level, in this area. We did have, from the original start of the trend to the top of the trend, we did have a 382 retracement indicated by this blue line, which was also confirmed or gave us our higher time frame confirmation points. And the thing I liked most about this trade was that price had retested this previous level of resistance that formed this higher trend line of this pennant flag that had formed in the market at this point, and I was just trading this Gartley that completed at that retest of that pennant flag. We did have stochastic crossing over, and we did have the MACD momentum showing that the strength was probably going to change directions. Now, everything did go as planned. Going into what the picture looked like when it all went as planned, we can see that here is that level where price retested that previous level of resistance where the Gartley pattern completed at. Target 1 was taken easily, even though I did chase it to ensure that my orders were going to get filled at that level, so I could move my protective stops to break even to ensure that the rest of the trade was going to be a risk-free trade. I did take my second profit targets here, which were the 127.2% extension of this XA leg, and I took the profit target 2 just short of that extension to ensure that my orders got filled. And then my third profit target was a rolling trail stop The market did go as high as 1.0360 if I'm not mistaken. I ended up getting taken out here at 1.0217 for a gain of about 400 pips. This particular move did show gains in excess of 500 pips, so this was a very, very, very nice winner here for trade number 87. So the next question as part of the post-trade review is what can I do to improve, and what steps will I take for improvement? Well, the first and most logical step I can take for improvement is to make sure that I don't hesitate when I do have a qualified signal to enter the market, like I did here on this particular Friday, which if I'm not mistaken would have been Friday the 16th. Yep, that's exactly what it was. September 16th. It's, you know, it would have been better if I would have taken the trade near the close of that Friday to maximize the amount of gains on the front end of that trade, and to therefore move my stops, actually to have a better looking risk profile, because my stops would have stayed just at the same location, just below point X. However, my entry would have been 30 pips less, giving me a less amount of risk to deal with. Other than that, I mean, I feel like I handled this trade pretty well, considering that I did roll my third contract completely through after the market showed gains in excess of 500 pips. You know, the one thing I was thinking about doing was, after a new strategy to look towards in the future is after trailing this trailing stop on the third contract, it would probably be a good strategy to invoke some kind of TCT or a reverse TCT entry strategy, because once you've trailed this target, or you've trailed this protected stop in a market in excess of 500 pips, there's probably going to be a high likelihood that if this trail stop gets taken out, and therefore takes me out of the market, there's going to be a high likelihood where the market is going to continue on past this trailing stop for, I think today I was looking at, it was somewhere in excess of 100 pips. So maybe a way to improve upon this, a trade as good as this, is to be able to reverse the position after I've maximized the amount of gains taken out of the market. Also, maybe once I've another way to maybe improve upon this trade is once I've seen, because if you look at this point right here, that's where the market initially made the maximum gains. After that, for a good 3 or 4 days, the market just consolidated at this level. It'd probably be a good idea to invoke a new ROE add-on point that states, once the market consolidates after trailing the third trail stop for as long as I did in this situation, that it might be good to take profit targets at the high end of this consolidation area, just to maximize even further gains in this type of scenario. Other than that, this trade is a perfect example as to why continuing to trade your system or your strategy, even through drawdown, with consistency and discipline, is imperative to the profitability of your equity curve. Even though I had a 9-trade losing streak, I still took the trade as per my system rules of engagement, and here's testament to why doing that is so important. I just earned 500 pips, trade number 87. That's my post-trade review. Thanks for watching. Don't forget, take your profits.